YouTube. Does a couple of minutes of preparation to get us up and operational over there. And all of a sudden it just jumps on. We'll start the recording and get going on that. Okay, lightning. Wow, that's interesting. So let's see. It looks like we are get going on that. See, it goes back and it grabs it. So put that on mute. And let's go ahead and go here. The little process here we have to go through. Does anybody have any, is anybody else using, real quick question, is anybody using GoDaddy for their hosting? And I wonder if you've been having any issues or problems with them. If you have, hey, just do me a favor and just shoot me an email or shoot me a text message. I'd really appreciate it, or let me know what's going on. So, hey, anyway, good afternoon. Good morning, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Welcome to How to Make Money Trading Stocks. This is our weekly live stream webinar and Zoom meeting. I want to thank Steve Ferrara for joining us from downtown, closer to downtown than I am, here on Oahu. And we want to welcome everybody else. Steve, welcome, my friend. I know that this is the second week. Is this unusual? You've gone 2 weeks in a row without really having a strong pick of a stock. Is that unusual for you?
That's quite unusual. I usually have trades many times a week.
Yeah.
It's been very tough this last 10 days.
Yeah, it's really, really wild. And I was doing some analysis, and just remember that what we do is for trading purposes only. Traders should always favor trade any new method prior to the risk of their own personal capital. I was basically doing some reading. As you're aware, I'm in the process of reading Dr. Alexander Elder's, revised book, Trading for a Living. And it's really awesome. But one of the things he mentions in that book is that charts provide us 3 answers to the question every trader asks about what do you do? And so the charts provide us 3 answers. 1, the answer is either you buy, it's multiple choice. You buy, you sell, or you stand aside. And right now the market, in a lot of ways, there's not a darn thing wrong with what the market's showing us right now, which is in a lot of cases, stand aside. If you want to trade in this market, I'll just let you know what needs to be done, is you got to be really nimble and really quick with tight stop losses, and you basically take you lower your expectations. Take, if you're wanting a 7 to 15% profit, you may have to settle for a 3.5 to 7% profit, but you just, and that's okay, because once the market does start trending again to the upside, you'll be able to basically continue to trade. The other thing is, hey, sometimes the best action is to prepare for the next time the market goes into rally mode. And that means standing aside, going back and reviewing your current charts, review your current watch list, so you're ready to rock and roll when it's time to happen. So, hey, here's where we're sitting about 11 o'clock this morning, September 11th, 2020. One of the things I always ask myself on September 11th, of course, is where was I? It's a point in history that will always be remembered, hopefully. And if you were alive during that time frame, I bet you can tell exactly where you were, what you were doing when you first got the word that the United States was under attack. And so with that, I'm not going to dwell there a lot, but that is I am a Navy veteran of 23 years, so it's hard for me not to go and address things like that. So how are we doing as far as the market's gone? I'm really quite pleased with where I'm sitting. Okay, I'm up almost 51% for the year. This is on primarily buying stocks and doing a few option trades, and we're beating the heck out of the S&P by 43%. So I'm really, actually, it's now up to 47%. What we did have last week happen was The Dow was just about up to break even, and now it's sliding back off. The S&P slid off a little bit today. Nasdaq still the big dog in the junkyard, and then the Russell is still the lagger. Now, what tends to happen going into the end of the year? What happens towards the end of the year? Oftentimes the Russell strengthens and outperforms the other indexes. So let's keep our eye out for that. And then let's see, Barry sends you a message, Steve, watch Nike. It broke the 52-week high, blah, blah, blah. And likely will close up, but at a lower end of its candlestick. Okay, he doesn't think it's going to hold this market. So that's Nike. So let's get in and just jump right into the individual. Well, here's what we're doing is we're basically just, here's what we're looking at. Here's what we provide every weekend or every Friday, of course, is we want to provide traders with top-notch market analysis. You know, Steve's a master trader. I'm a master trader, master stock picker, according to Investor Business Daily. And we want to provide timely analysis every week, timely actual intel that clarifies, simplifies trading decisions so that you can multiply your profits and minimize your risk. My take on the market right now, yes, we are experiencing and we're into almost midway through the September weakness that tends to happen. You know, in March, you always have March madness, except this past March for the college basketball playoffs. So September weakness, we got to come up with a real spiffy term to talk about that. It is providing some downside opportunities. That's what I highlight today after we do the market analysis. And the big but, though, is trade the chart that's in front of you. I think who says that? Bill, what's his name? Kramer. Jim Cramer says that there's always a bull market, or somebody says that there's always a bull market somewhere. And it's absolutely true. It's absolutely true. So let's go here. What else is going on? Steve's got his stock picks, no stocks today. And then again, if you're looking for a trade journal, find it on Amazon. I provide a link to that. Let's get in and look at the charts. Okay. Let's blow this up. And I will go out just a taste. There, not, that was more than a taste. So here we are early in the year. We were down here, right? And basically the market has gone into an excellent uptrend during the, over the last, since March of this year. And however, it is in the process, is it in the process of doing a major top or just a minor top? We don't know at this particular point. What we do know is that price action is showing weakness. What's happening? As soon as, we have on S&P, we have not closed below the 50 yet. We do get the on the daily chart, the 8 and the 20 crossing what appears to be to the downside. When that happens, September stall. Oh, so I like that, Eric. It goes really good with the top 5 autopilot trading. Huh? So, right here is anytime once you get below the 8 to 20 and you're starting to test the 50, sometimes you'll blast on up and cut right through them like they're butter. Other times, like we're seeing right now, price action is failing and the moving averages are acting as dynamic resistance for the move back up. If we break the 50, where are we going? There's a good chance we'll go on back down to the 321, 320 level. If we do go that far, what kind of a retracement is that going to be? And I'm just going to give you a highlight on this. Like if we get down to there, you're only talking about 11%. A healthy 10 to 12 or even 15% pullback in the S&P might be just what the doctor orders in order to set us up for a big move going into the end of the year. On the here's something, and I won't say it's of concern, but the TSI is turning over to the downside. The market forecast is heading down with its long-term momentum. And this intermediate, well, they call this intermediate momentum. It is breaking down. And that is the trigger to say, hey, I'm not going to take any long trades until we get some kind of a reversal signal. We find a stronger level of support, which I like these levels right in there, which corresponds to right in here, which is the one we already identified. For your triggers to the upside, running over to the NASDAQ, we'll look at the Qs as a stand-in for the NASDAQ. What the heck is it doing? Okay, interesting on the weekly chart. Let me get rid of this fib. We used that a little bit earlier. Okay, what did we have last week on the NASDAQ? We had a bearish engulfing, a huge outside week. And oftentimes when you get at the end of a big trend and you get an outside bar like that is for a weekly bar, you then get further moved down, in as a trend reversal in opposite the direction of the previous trend. So that's what we're currently getting here. TSI ticking over and crossing over to the downside. Longer term market forecast crossing over the downside. And then again, weakness showing up on the daily chart with basically right now, the NASDAQ, if we close where we're at, will be below the 50. That's oftentimes the prerequisite to slide even further. Notice volume up slightly, but we've got TSI, or we've got market forecast heading down. We've got TSI heading down. And so where might we go? Again, just throw on a fib, not a fib, but you can do a fib, but just throw on we get down to this past support. That's about a 17%. So, 15, and I can see this getting down to 256 or even this level here, this past breakout area, 251. That's a 17% drop from the high. However, it is only we take where we're at right now and take that one. That is it's only about 6% away, 6% away. So NASDAQ has been basically, while it is the strongest of the entities, it has also been, falling the most. So we'll grab that out of there. So it's already down the day's low was 12% down. So very interesting. And then last but not least, we'll take at IWM, representing the Russell. It also is showing signs that, hey, I still want to go down a little bit. So how do you want to trade this? This is one of the, because I like to trade either the NASDAQ, the Qs, or I like to trade the IWM or the leverage ETFs that that are for both of them. Now that we have price action closing below the 50, that is indicative that we're probably going to go on down and test the lower lows, which are the 200. So that's about 145. That's only $3 or $4 away from where it's at right now. But we do know we have a nice little, and let me draw a little, I'll draw a little upper trend line, resistance level, extend that to the right. And anytime we get price action back in or around that trend line or the 820, it bounces back up into the 820, that's an excellent time to say, hey, that's where I would want to plan going, doing some kind of a downside trade or trading TZA to the upside. But it has to be against those areas. And so what we're doing is just like when we're on an uptrend, we're looking for pullbacks into the moving averages, looking for the same darn thing, but the mirror image of it when we're trading to the trying to trade to the downside. The other thing I wanted to highlight for people who are looking to trade to the downside, typically downside moves are larger magnitude, but they they happen 2 times faster, sometimes 3 times faster, but you can count, rule of thumb, 2 times faster than upside moves. And so again, that's one of those things where we want to adjust our expectations and say, hey, I'm getting a downside move where I would anticipate an upside move to last like 4 to 5 days. I'm expecting this downside move to last only 2, 3, 4 days, and then go ahead and look to take your profits at that point. So Steve, that's what I've got on the indexes. You got any thoughts on it?
Not too much more to add. Pretty much agree with what you're saying. I think we're right on the cusp of deciding which way it's going to pop, up or down.
Roger that.
Make arguments either way. So we need to just wait to see what the market does, and then once it settles, decide when it's time to start taking long trades again, or go short the market.
Exactly. So yeah, and also, like as I was saying, I like to identify the areas, the value zones or the action zones,
Right.
where it's what that is by identifying, hey, I'm going to wait until we get a pullback up into the 8 or the 20. What you're doing basically is you're putting a threshold in place where you're close to you're close to your stop loss. And so you've actually reduced your level of risk. So, hey, let's jump right over. I want to cover just one other thing, and then if I can find it. Hold on just a second. Well, I can move this over. Let me, I want to look at one other thing for you. If you're a gold bug, we continue to see gold, kind of flopping around a little bit. It's basically in a zone that it is. Let's see what gold's doing. Yeah, gold's down about $15 today, but it's in this like little zone. Let me throw up the futures, and you can see that zone. It's just basically, this is a consolidation zone where it's hitting down here at about 1911. The top of it is about 1994, almost 2000. And so when it's doing this, it's in a chop mode. This is where you want to look at your Keltners. The Keltners are going almost straight across. There's no trend to this move. Therefore, if you're looking to be a gold person, you want to buy towards the low and take off some profit. You don't have to take off all the profit, but take off some profit near the high. Now, one of the things that we want to take a look at, though, is what's impacting us. Why is gold acting this way? We should get a gold rally going into the end of the year, but what's going on? The big thing is gold's tied to, no, I want the Dixie. There we go. The Dixie cup. And what that is, this is the dollar. And the dollar has been, stop it, in a little bit of a rally mode over the last 7, 8 days. And as you can see, gold's been kind of going sideways. Typically what transpires, if the dollar is going up, gold is going to be either neutral and or going down. If you can look, earlier in the year towards July timeframe, what was gold doing in the July timeframe? Let's zip right over here. And so this is one of those, and this is dollar sign DXY, the dollar index. And what was gold doing around July? Let me see if I can find that. I'll just put in there GLD, which is a good proxy. Again, going back to the same time frame. Well, here we are in, okay, get it to stabilize. Here we are in that same July time frame. As the dollar was falling from the sky, gold was doing a nice run up. So just keep that in mind. The two are correlated, kind of inversely correlated. Dollar's going up, gold's going down or stabilized. Dollar's going down, gold's going up. Typically, normally. Now it doesn't have, sometimes you get a divergence on that, and that's okay. But I just want to highlight that to you. Again, and also highlight, and I'll show you one. And this is when you get weakness and it drops below the 50-day moving average, or the moving averages start to cross, like we're having right here. Sit down. With we had a nice breakdown below off of a basically kind of a 3-line cluster on the market forecast on a weekly basis on NASDAQ. On Netflix, it fell, breaking down below the 820, broke below the 50, then does a rebound over the next couple of days. Where to? Back up to the 8, shows a reversal right there off the 8. And that's where once you get these kind of moves and you get a drop in the morning and a pop in the afternoon, you can look, and these moving averages have started to bend over, basically have started to be bent over. They work at that point as dynamic resistance, and you can literally plan your trades around those. For premium members, stand by for a lot of those coming in the next week, and top 5 guys. So I wanted to share that with you. That's what you can kind of be ready for. Right now, Netflix, Netflix has got some mixed things, but I'm watching Netflix because it does move and move nicely in some, with some really good patterns. So let's go ahead and just finish up the day. Again, Steve, thanks for confirming. Basically, and I'll ask you one question just real quick: is what do you do when you're just not finding anything to trade?
I try to sit on my hands. Sometimes
Okay.
That's what to do.
Cool. And so, okay. So big question for everybody today is, do you use Keltner channels? Yes or no? Do you know how to use Keltner channels? Yes or no? Just answer in the chat box. I am going to be basically providing a training session. Yes to both, no. If you would like to get some more information, or, basically I'm going to provide some training for the Bay Area money makers tomorrow. And it starts at 9 o'clock in the morning. And here is the, let's make sure that goes, let me do that one more time because I want it to go to everybody. Here is the link if you want to, get in and join us for that. Some of you already do, but I'm going to be covering 2 different topics. I'm going to be covering the Keltner channels. I'm also going to be covering the connection between the Keltners and the True Strength Index. And so if you don't have any information about how those work, it'll be it's going to be 2 hours of strong training that you don't want to miss. So let's see. Remember, hey, if you're new, subscribe to YouTube, subscribe, hit the bell so you'll be notified of new content. And lastly, give us a thumbs up. If you have any questions, or if you're looking for us to do a webinar for you, I'd be glad to. Reach me at, there's my email address. And last but not least, if you want a weekly trading plan that's basically on autopilot, the Power Ranked Elite Top 5 is what you should be looking for. We're going to have a very special announcement coming up about the Top 5 Autopilot Trading Challenge, which is going to be a 2-week challenge. It's going to give you some insight into how to trade the top 5 on a weekly basis in some lifetime with me. So I'm going to conclude, as I said, I remember what, happened 19 years ago. I had a friend of mine that I went through flight school who was in the second tower. They were on, they were about 4 or 5 floors below where the aircraft hit, where the terrorist aircraft hit. And because he was a naval aviator, he recognized the smell of the jet fuel as it streamed down the elevator shaft after the collision and the crash into the second tower. And he was working for a broker on that the second tower, and because of his recognition of the smell, he was able to get his total staff of about 50 people down the stairs to safety before the tower collapsed. And so the like I said, changed our lives forever. So we will never forget. So until next weekend, hey guys, from our home to yours, I just want to say, yep, trade well. Aloha, trade well, prosper. Mahalo. God bless everybody. Steve, thanks. Next week, you're going to have stocks for us, Steve. I know it. I sense it in my bones. And so, yep, just there'll be some other things pop up here. And so that's it for today. I want to thank everybody for joining. Again, Steve, thanks for being here. And everybody have an absolute fantastic rest of your weekend. And aloha. God bless everybody.